In this episode, we give you a number of updates on your federal student loan journey, starting with the final death knell of the SAVE plan. Let's get started. Are your student loan payments or loan balances a major obstacle in your financial life? Then tune in and let's escape student loan debt. Hello and welcome to another episode. This is going to be another one where it's a bunch of random updates that are relevant but don't necessarily have a unifying theme. Well, some of them are unifying, but definitely hope it's valuable. We're going to start with the final death knell of the SAVE plan. As I shared in the last episode, I did not think that this was something that was going to take long for the courts to finally strike down. And in transparency, I also shared in that episode, we were planning to do a deep dive on the repayment assistance plan this week. The reason that I'm pushing that off is because a higher court stepped in between the time that we would have released the repayment assistance plan episode and said, no, the SAVE plan is done. You as a lower court need to just honor the settlement that the two parties agreed to. And that settlement was the dissolution of the SAVE plan. So it is done. There has not been an update in terms of how long it's going to take the borrowers who are currently on the SAVE plan and move them into another option. I'm also seeing a wide range of opinions as to what people will be moved into. I told you my thought is that those people will be moved into the new or old version of the income-based repayment plan if they are moved before the repayment assistance plan is launched. I think if this transition occurs after the release of that plan, that there's an option that they might go to that. You're also seeing people who are saying that if you leave it up to the Department of Education or your servicer, they're going to put you in the standard plan. I can tell you that would be a great shock for many people who are on IDR plans. So if you haven't already, go back to last week's episode and I'll tell you who I think should consider being proactive in moving out of the plan and who should potentially just wait and see what their loan servicer does. But the big update there is the SAVE plan is formally finished. Now, I do think that in terms of people who are trying to kind of get ahead of the queue, and getting ahead of the queue is really something that's impossible, but be further ahead than you would have been if you waited. There are some considerations based on activities that you need to take for your federal student loans. For example, we're going to start with people who have Parent Plus loans who are trying to preserve their ability to be on income-driven repayment plans moving forward. As a reminder, based on the One Big Beautiful Bill Act, for people who take out new Parent Plus loans after the middle of this year, so July 1st and on, or for people who have existing Parent Plus loans who have not taken certain steps, you are not only going to be shut out from access to income-driven repayment plans, that automatically means you are shut out from public service loan forgiveness as well. So this is a hugely consequential thing that you need to do if you are either considering taking out a new Parent Plus loan or if you have one that you're trying to have forgiven. I'll be transparent. If I had a child who was college age, I just wouldn't take out a Parent Plus loan. It's too punitive. Unless I knew for a fact that paying it back in full was not going to be a financial burden, then I just wouldn't take one out. I'd find another resource because of the lack of options of having it forgiven. Of course, if you have high income, a strong ability to repay, it may not be a concern, but it is that punitive deciding to take out a student loan July 1st of this year or later. If I had an existing Parent Plus loan, I want to make sure that I've positioned it to sign up for an income-driven repayment plan. If you're one of those people from when they had this loophole that did the double consolidation loophole and you've completed that process, you're fine. If you have not done anything to your loan, what you have to do is you have to consolidate your Parent Plus loan and you have to sign up for the income contingent repayment plan and then make 1 month's payment. That will position you to be eligible for income-driven repayment plans moving forward. Now, I can tell you there is a huge backlog when it comes to income-driven repayment plan applications, and it typically can take up to 3 months for a consolidation application in general, which is why April 1st is a huge deadline for these borrowers. Why? You have to have that consolidated loan processed and issued by July 1st. And if it takes 90 days, April to May, May to June, June to July, you really, to be safe, need to make sure you have that application in no later than April 1st to be in good standing. But if you're listening to this and it's relevant to you, you really need to take care of this like today. This is also relevant for people who are trying to position themselves for either a more advantageous income-driven repayment plan, or if they're pursuing public service loan forgiveness. You can only get public service loan forgiveness if you have a type of loan called a direct loan. There are people who are on income-driven repayment plans who might have a type of loan called an FFEL loan or a Stafford loan. That's eligible for the income-based repayment plan. It is not eligible for public service loan forgiveness, and it's not eligible for some of the potentially more advantageous federal student loan payment plans like the pay-as-you-earn plan. You also, if you want to get that eligibility, have to make sure that you have your loans consolidated into a direct consolidation loan by July 1st, really June 30th, which means that April 1st is the deadline. But again, if you're looking at this and you have any questions or concerns, you can go on studentaid.gov. You can look at your loan types. They should all have direct somewhere in the title. And if it doesn't have direct somewhere in the title, you may be one of those borrowers that needs to take action like yesterday. Another reason that that's so important, and maybe this is the unifying theme, taking action immediately and not waiting, it is because in addition to the general delay of a consolidated loan, which already takes 2 to 3 months, there are a lot of people who are trying to sign up for income-driven repayment plans and are being stuck with huge delays, months and months and months delays. And this was illuminated by the fact that the Department of Education is having to give regular monthly updates as to their processing of income-driven repayment plan applications and also public service loan forgiveness buyback applications. And in their most recent update, they share that there is a backlog of over 560,000 income-driven repayment plans. This is technically a decrease from January, where they had over 600,000, but they are definitely moving at a snail's pace. I will say, in my experience and in looking at the experience of others in the space, if it is not disadvantageous to you, if that's the right way to use that word, to use your actual tax return, that seems to be processed faster. So when you go through the process of an income-driven repayment plan, obviously they're basing the payment off of your income. There are various ways to submit your income. You can submit alternate forms of documentation if they're more advantageous to you, or you can give your student loan servicer direct access to the IRS database to get your most recently filed tax return. For the people who are giving that access, their application seems to be moving faster than people who are submitting alternate forms of documentation. I will still say that I would prefer you submit that alternate form if it leads to a significantly higher payment, even if it leads to a longer wait to have your application processed. But if you're someone who's not concerned about submitting a tax return, that seems to be faster. That said, there is still an extremely long backlog, although they are making progress in a positive direction. One area where they're not making progress, they're going backwards, is processing public service loan forgiveness buyback applications. In their most recent update, there were 88,000 and some change public service loan forgiveness buyback applications yet to be acknowledged and processed. That's an increase from the 86,000 and change that they reported in January. As a recap, public service loan forgiveness buyback is a program where if you had all the other elements that made you eligible for public service loan forgiveness, that being having a direct loan and also working for a certified nonprofit or government entity, even if you weren't making payments during that stretch of employment, the buyback program gives you the ability to go back and essentially make the payments that you would have made at that time and get that past credit applied to your account for public service loan forgiveness. The positive news is there still is no indication that the Trump administration wants to do away with the program. The negative is I saw some commentary that said even if no new applications were submitted at the pace that they're moving, it would take over 3 years for the department to process just the applications that they've already received. So not necessarily a positive update in terms of the speed, positive update in terms of the fact that there's still no threat to the program, but govern yourselves accordingly in terms of having extreme patience if you submitted a buyback application and have yet to receive any indication of whether it was accepted. Another negative update leading to a hopefully more positive update is in the month of February, the Department of Education did not forgive a single student loan through the income-driven repayment plan forgiveness. There were applications that were processed for forgiveness through public service loan forgiveness, but they did not process a single forgiveness app for income-driven repayment plan. That said, they did indicate that there is a huge group, and huge is obviously subjective, of borrowers who are going to see their student loans forgiven in the coming weeks. The reason for that, as we've covered on the podcast, there was a stretch of time where the department was refusing to forgive student loans for borrowers who were using the pay-as-you-earn plan, the income contingent repayment plan, the SAVE plan, the rationale being that those plans, in their opinion, were illegal and that they did not have the legal authority to process that forgiveness. Now that that has been smacked down in the courts and they have agreed to process forgiveness under any of the income-driven repayment plans, it took them another few months to, in their words, get their systems in order to process forgiveness. They have now done so, and they've indicated to the court that there's a huge backlog of eligible borrowers who will see their student loans forgiven. Another update for private student loan borrowers is if you keep up with the Federal Reserve and you keep up with their interest rate increases or decreases, the Federal Reserve has indicated that it is likely that the maximum number of interest rate decreases that we'll see in the given year would be one, but potentially less, meaning none. They also have indicated that they may increase interest rates because there are some concerns about inflation due to the Iranian war, all the types of things that you see on the news, unfortunately. What this means for private student loan borrowers is if you have been kind of on the fence of refinancing an existing private student loan to a lower interest rate with another provider, or if you have been considering refinancing your federal student loans with a private lender, if you don't take action now, you may find that over the course of the next few months, those opportunities will be less attractive. So I would encourage you, if you go through some of the episodes that we've went through, to evaluate whether you should refinance a federal student loan with a private lender or how to go about refinancing an existing private student loan, which is actually a really easy process, which has minimal impact on your credit, does not cost you any money in terms of adding balances to your loan. Now would be the time to reassess that opportunity. So I know this isn't a long episode, but there were some slightly larger updates that I wanted you to be aware of. Again, we are trending towards having a deep dive into the repayment assistance plan. We're just waiting for a 2-week stretch where there's not other relevant news that kind of jumps the line in terms of priority. But we're going to give you all the information you need to have your federal or private student loans forgiven, reduced, reorganized, or expedited. And I hope to see you again in 2 weeks. From Escape Student Loan Debt, this was the Escape Student Loan Debt Podcast, a show for established professionals whose student loan payments or loan balances are impacting their marriage, their business, their credit, or their dream of achieving homeownership.